Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dobie. A very common discussion point when we're looking at portfolios for clients is, should I own or should I be a participant in the price of gold? And when I say a participant in, because there are several different ways in which you can be a participant in the ownership of gold. Certainly you can buy gold coins, gold bars, those kinds of things which are the physical manifestation of gold that you have to keep in a safe or pay to have stored. That certainly is one way to do it, but there also are a number of other instruments that you can utilize in the financial universe to be a participant in the price of gold. So you don't actually own the metal specifically, but perhaps you own a gold exchange traded fund or a gold fund, or perhaps you own individual stocks of gold miners or other kinds of things that may be out there which are linked to the price of gold, some more directly and some more indirectly than others. But when the question comes, should I own gold? I'm going to start out with a terrible answer. It depends. Everybody's situation is unique and different, and so the answer may be yes or it may be no. You want to make sure to look at your specific situation. But a couple of points to keep in mind. Gold, as it sits today, is very, very different from gold of the 1970s and 1980s. Now, I'm not saying that the chemical composition has changed over the last 50 years. I'm talking about how the market looks at it. Back in the 1970s, up to about the mid-1970s, we were on the gold standard. Very, very different in terms of identifying gold's relationship to our currency, the US dollar. We are nowhere close to that anymore, so there isn't that same kind of financial connection. So when we look at gold, we look at it in terms of it being an alternate asset class. Specifically an asset class that the market agrees has a store of value associated with it, which is different from the stock market, from the bond market, from real estate or other kinds of investments. And that's why we look at it as a possibility for folks inside of their portfolio. Again, very, very different from several decades ago, and really looked at now as just a different or alternative kind of asset class. Second big point that you want to keep in mind when it comes to gold, remember, gold doesn't pay a dividend. It doesn't pay interest. What you're doing is you're participating, what you hope, is in the price appreciation of gold. For all the obvious reasons. When you buy something here, we'd like it to go higher in terms of appreciation. But you want to make sure that it fits inside of your particular financial plan. It's not for everybody. Just like stocks aren't for everybody, just like bonds aren't for everybody, just like real estate isn't for everybody. So it's very, very important to keep that in mind. Make sure it's applicable to your specific plan. If you'd like to reach out to us at North Main Financial Group, perhaps talk about gold and does it fit? Does it not fit? How do you own it? Is it appropriate for your particular portfolio? We'd love to hear from you. NorthMainFinancial.com.